The BRICS Plus alliance, an expanded version of the original BRICS, represents a powerful shift in the global economic landscape. As emerging economies like Saudi Arabia, Egypt, and others join forces with Brazil, Russia, India, China, and South Africa, the bloc is rapidly gaining influence in trade, energy, and finance. For investors, BRICS Plus is more than just a political partnership. It's a growing market with untapped potential, alternative payment systems, and a challenge to Western economic dominance. In this new era, understanding BRICS Plus could be key to spotting the next big investment opportunities. Today we will talk about BRICS Plus investing, a look at the new economic bloc. So before we start, make sure to hit the like button and subscribe to my channel. 1. BRICS Plus emergence. The BRICS Plus concept has rapidly evolved from its original BRICS foundation, consisting of Brazil, Russia, India, China, and South Africa. Originally formed to challenge the dominance of Western-led institutions like the IMF and World Bank, the bloc has expanded its vision to incorporate a wider coalition of emerging markets. The BRICS Plus initiative was formalized with the idea of creating a multipolar world where economic power is more balanced. Countries like Argentina, Egypt, Iran, the UAE, Saudi Arabia, and Ethiopia have now been invited or are considering membership, significantly increasing the bloc's geopolitical and economic footprint. This expansion offers a collective GDP that rivals that of the G7 and represents a substantial portion of the world's population and energy resources. 2. Investment potential. The investment potential within BRICS Plus countries is vast and multi-layered. These economies are rich in natural resources, industrial growth opportunities, and expanding consumer markets. For example, Russia and Saudi Arabia dominate the energy landscape. Brazil offers agricultural wealth, and India and China are epicenters of manufacturing and technology. The new entrants like the UAE and Egypt provide strategic trade routes and investment hubs. The bloc's focus on infrastructure development, renewable energy, and financial integration presents opportunities for investors across sectors. Local stock markets, commodities, and currency instruments within BRICS Plus nations are becoming increasingly attractive to those seeking alternatives to traditional Western assets. 3. Local currency push. One of the most disruptive strategies being pursued by BRICS Plus is the de-dollarization movement. The bloc aims to promote the use of local currencies in trade settlements, reducing dependence on the US dollar. This move has significant implications for international investing and global capital markets. Russia and China, for instance, have already increased bilateral trade in yuan and rubles, while India is exploring rupee-based oil purchases. The inclusion of Saudi Arabia and the UAE, major energy exporters, adds further weight to this currency diversification push. The BRICS Plus currency agenda is also aligned with the development of a proposed new shared currency, potentially backed by a basket of commodities like gold and oil. 4. Commodity dominance. BRICS Plus nations hold a commanding position in global commodities. Russia, Saudi Arabia, and Brazil are critical players in oil, gas, and agricultural exports, while China is a major importer and processor of these resources. With South Africa's mineral wealth and India's growing energy needs, the bloc is establishing itself as a commodities powerhouse. This concentration of resources gives BRICS Plus substantial leverage in global supply chains. The ongoing coordination among these countries could reshape pricing power, particularly in oil markets, where new energy alliances like OPEC Plus may see increasing BRICS Plus influence. Additionally, the bloc's growing investment in rare earth elements, lithium, and other critical minerals essential for green technologies could enable it to dominate emerging sectors like electric vehicles and renewable energy. 5. Infrastructure growth. BRICS Plus countries are prioritizing large-scale infrastructure as a foundation for sustainable growth. This includes roads, ports, railways, digital connectivity, and renewable energy installations. China's Belt and Road Initiative, BRI, already serves as a backbone for much of this infrastructure push, with investments extending into Africa, the Middle East, and South America, many of which overlap with BRICS Plus member nations. The new development bank, NDVE, backed by BRICS countries, is expanding its lending capacity to include green infrastructure, smart cities, and cross-border trade corridors. These projects are not only improving logistics, but are also creating new trade routes that bypass traditional Western-controlled pathways. For investors, this infrastructure boom opens opportunities in construction, materials, logistics, and energy sectors. Additionally, the increasing focus on digital infrastructure, like 5G networks and digital payment systems, signals rapid modernization that can attract significant venture capital and foreign direct investment. 6. Financial integration. The BRICS Plus bloc is not only expanding through trade and infrastructure but also working toward greater financial integration. The new Development Bank and the Contingent Reserve Arrangement (CRA) offer BRICS Plus members alternatives to Western-dominated financial systems like the IMF and World Bank. Recent discussions have emphasized setting up payment systems independent of SWIFT, creating cross-border digital currency platforms, and even developing a potential BRICS Plus blockchain network to facilitate secure financial transactions. These developments aim to reduce reliance on Western financial infrastructure and promote self-sufficiency within the bloc. For investors, this financial decoupling presents unique opportunities in fintech, banking, and payment processing sectors that serve the emerging intra-bloc trade ecosystem. The rise of local stock exchanges, bond markets, and capital raising through BRICS Plus channels could also open doors for early-stage investments in growing financial hubs like Shanghai, Mumbai, and Dubai. 7. Political challenges. Despite its economic promise, the BRICS Plus bloc faces complex political challenges that could hinder seamless integration. The member nations have diverse political systems, ranging from democracies, like India and Brazil, to authoritarian regimes like China and Russia. Differing national interests, territorial disputes, and historic rivalries may complicate decision-making and undermine the bloc's cohesiveness. Additionally, aligning trade policies, currency strategies, and infrastructure priorities across such a heterogeneous group poses a significant governance challenge. External pressures, particularly from Western countries, may also influence internal dynamics through sanctions, diplomatic isolation, or competitive counter-alliances like the G7 or the Quad. The political risk is further amplified by domestic instability in some BRICS Plus nations, where corruption, regime changes, and social unrest can disrupt long-term investment projects. 8. The future outlook. The future of BRICS Plus investing looks both promising and unpredictable. On one hand, the bloc's growing size, resource base, and financial independence strategies position it as a major force in reshaping global economic power structures. The continued expansion of membership, likely to include more energy-rich and strategically located nations, could amplify its influence on trade, commodities, and financial systems. Initiatives like the potential introduction of a shared currency, enhanced digital infrastructure, and alternative trade routes suggest a gradual pivot away from U.S.-centric globalization. On the other hand, BRICS Plus still faces hurdles including political fragmentation, currency instability, and resistance from established global institutions. Investors seeking exposure to BRICS Plus markets should approach with a long-term diversified perspective, focusing on sectors aligned with the bloc's growth drivers: energy, commodities, infrastructure, and financial innovation. If you like this video and would like to see more like it, please give it the thumbs up, leave a comment, and click the button to subscribe.